Good morning, and welcome to your daily crypto market update for January 18th, 2026. I'm bringing you the latest developments from the digital asset space as markets continue to navigate a complex landscape of volatility, regulation, and institutional changes. Let's start with Bitcoin, which remains in a critical technical position as we move deeper into the new year. After a relatively quiet end to 2025, Bitcoin has shown signs of renewed movement in early January. However, the world's largest cryptocurrency has yet to convincingly reclaim its key moving averages, leaving traders watching for confirmation signals. The price action suggests we're at an inflection point where volatility could emerge in either direction. Technical analysts are noting that Bitcoin needs to sustain a reclaim of the 2025 yearly open combined with bullish exponential moving average structure to open the door for a push toward the next major resistance zone. Failure at current levels would likely lead to a sweep of recent lows, potentially offering better entry points for patient investors. Ethereum is painting a different picture entirely. While Bitcoin remains undecided, Ethereum is already demonstrating the technical strength that traders have been waiting for. The second largest cryptocurrency is breaking back above key exponential moving averages and appears to be flipping them into support, a structural shift that many analysts view as significant. This relative strength is particularly noteworthy given how many alternative cryptocurrencies historically depend on Ethereum's health to sustain upside momentum. Current price forecasts suggest Ethereum could reach approximately $3,400 by the end of January, with technical indicators showing a neutral bullish sentiment of 58%. The Fear and Greed Index is displaying a neutral score of 49, indicating balanced market sentiment. XRP continues to capture attention with its strong performance in early 2026. The token has gained over 16% so far this year and was trading near $2.14 as of January 14th. This momentum comes amid ongoing discussions about XRP's long-term potential, with some investors debating whether the token could ever reach ambitious price targets like $100. However, analysts point out that such valuations would require XRP's market capitalization to exceed $6 trillion, positioning it as one of the most valuable financial assets in history. More realistically, XRP's current fundamentals show increasing real-world utility, with on-chain activity increasing over 50% in late 2025 and daily transactions approaching 1 million in early January. Turning to exchange developments, Binance has announced multiple delisting actions throughout January 2026. The exchange has issued notices for the removal of various spot trading pairs and perpetual contracts, with the most recent announcement on January 17th regarding the delisting of multiple USD-margined perpetual contracts scheduled for January 21st. These routine delistings are part of Binance's ongoing efforts to maintain trading quality and comply with evolving regulatory requirements.
On the regulatory front, significant developments are shaping the crypto landscape. The Securities and Exchange Commission has implemented changes to accelerate the launch of new spot crypto exchange-traded funds by establishing generic listing standards. This allows exchanges to list ETFs without filing individual rule changes, with issuers only needing to file S-1 forms for approval. The change is expected to significantly streamline the ETF approval process. However, landmark digital asset legislation in the Senate is facing unexpected challenges. Senate Banking Chair Tim Scott has postponed a crucial markup after Coinbase CEO Brian Armstrong announced opposition to the bill, citing concerns about the erosion of Commodity Futures Trading Commission authority and potential amendments affecting stablecoin rewards. This development highlights the crypto industry's growing political influence after spending over $100 million on congressional races. Looking at safety measures, regulators worldwide are intensifying their focus on market integrity, fraud prevention, and anti-money laundering compliance. The Basel Committee on Banking Supervision has approved frameworks requiring banks to disclose virtual asset exposure starting in 2026. Additionally, proof of reserves is becoming a standard compliance obligation for virtual asset service providers. As we move forward,
the crypto market appears to be entering a period where volatility is likely to return after weeks of sideways movement. Ethereum's technical strength, Bitcoin's pending breakout decision, and XRP's continued momentum suggests that January could set the tone for the rest of 2026. Regulatory clarity continues to evolve, with both opportunities and challenges emerging as the industry matures. That concludes today's crypto market update. Stay informed, trade responsibly, and we'll see you tomorrow with the latest developments from the digital asset space.